The US government owns more Bitcoin than every other nation-state combined. If you didn't know, that's not thanks to crypto lobbyists. It's actually thanks to crime. The feds have seized an eye-watering amount of BTC in some of the most sophisticated law enforcement operations in digital history. For years, they couldn't get rid of it fast enough. Paper handing was federal policy. But that all changed this year, abruptly and completely. Now, instead of selling, they want to keep it. So, how much do they actually hold? Where exactly did it come from? And what are they planning to do with it? My name is Lewis. Let's find out. Before we get into it though, nothing in this video is financial advice. It's just the story of how the US government accidentally became a Bitcoin whale. And if you appreciate us reading through all of the DOJ documents so you don't have to, the like button is right there. Now, let's start with the obvious question. How much Bitcoin does the US government actually hold? The best estimate puts the total at around 325,000 BTC. This means the US now holds more Bitcoin than all other nations with publicly acknowledged reserves combined. In October 2025 alone, a single seizure added 127,271 BTC to America's pile, pushing total government reserves past $36 billion. So the US government is the world's largest sovereign Bitcoin holder. And while this sounds great, there is one problem. Nobody can really prove it. Unlike the Strategic Petroleum Reserve, the government has never publicly disclosed its total Bitcoin holdings. The 325,000 BTC figure comes from investigative accounting pieced together from DOJ press releases and court filings. In March 2025, an executive order mandated a full internal accounting of all federally owned digital assets. The order was signed and the accounting was presumably done, but the results were never made public. So, the outside world is still left piecing together fragments of information to answer a question that should have a simple answer. How many sats has America stacked? The lack of transparency creates real confusion. Just this summer, a Freedom of Information Act request revealed that the U.S. Marshals Service's Asset Forfeiture Division held a total of 28,988 Bitcoin, worth approximately $3.44 billion. That is a whole lot of Bitcoin, but it's nowhere near the 197,000 Bitcoin that the federal government reportedly owned at the time. So, what's going on? Is the aggregate estimate wildly inflated? Does Washington keep multiple shadow reserves nobody knows about? All possible, but there is a more simple explanation. The discrepancy was a snapshot of government policy in mid-transformation. For years, the U.S. Marshals Service was the endpoint for seized cryptocurrency. Federales would seize the crypto, and once the courts finalized the forfeiture, the assets went to the Marshals Service to be auctioned off. The USMS balance was a reasonable, if lagging, indicator on how much Bitcoin the government controlled at any given moment, because everything eventually ended up there before being sold. That pipeline, though, no longer exists. The March 2025 executive order that mandated the internal accounting also established the Strategic Bitcoin Reserve, which we'll examine in detail later. The critical point for now is this: it ended the liquidation model. Forfeited Bitcoin is no longer sent to the Marshals Service for auction. It's retained by the seizing agencies, primarily the Department of Justice and its investigative arms, and it's earmarked for transfer to the new reserves, which will be administered by the Treasury Department. So, the roughly 29,000 Bitcoin held by the USMS in July of 2025 is all that remains of the old system. Assets seized before the policy shift, or funds specifically designated for liquidation to cover victim restitution or operational expenses. The much larger 325,000 BTC estimate reflects the total assets now held under this new retention policy, spread across the seizing agencies. There is, however, a way to verify at least some of this. Bitcoin is itself, of course, a public ledger of transactions between wallet addresses, entirely visible to anyone who cares to look. Now, the government doesn't publish the wallet addresses where it stores seized Bitcoin, because doing so would be a security liability. But analytics firms like Glassnode, Chainalysis, and Elliptic have built entire businesses around identifying and labeling addresses linked to known entities, including not-so-subtle government agencies. When the DOJ announces a massive seizure, these firms can trace the movement of funds on-chain. In the case of the recent Prince Group forfeiture, more on that in a second, blockchain analysis confirmed the transfer of funds from addresses controlled by the alleged criminal organization into new wallets now held by US authorities. The transparency of the ledger allows for independent corroboration of government claims, even if the government itself won't confirm the specific addresses. So the 325,000 Bitcoin figure is real. It's verifiable, at least in aggregate, through on-chain forensics. What remains a mystery, though, is the internal structure. Which agencies hold what, where it's stored, and how it's being managed. But while the federal crypto portfolio is complex and opaque, managing your own stack doesn't have to be. For most of us, that means using a trusted, transparent exchange. And if you're looking for the best deals on those exchanges, then you have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000. Trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. To get all these goodies, all you need to do is hit the link in the description or scan this QR code. Once you get on the deals page, just find a deal that suits you and click one of the sign up now buttons. These deals won't be around forever though, so take advantage of them while you still can using the link in the description below or the QR code on the screen. So, we might not know everything, but we do know where the government's massive holdings came from. And if you haven't been paying attention, no, they didn't get it on Coinbase. Most, if not all of BTC held by the US was seized from someone who shouldn't have had it in the first place. What they're now calling a strategic reserve is really more like a trophy cabinet of successful prosecutions, and 3 cases account for the overwhelming majority of the haul. In October 2025, the Department of Justice announced what it called its, quote, largest ever forfeiture action, the seizure of approximately 127,271 Bitcoin, valued at nearly $15 billion. The funds were taken in connection with the indictment of Chen Zi, a Cambodian national and chairman of the Prince Group conglomerate. The Prince Group operated what prosecutors described as a global, quote-unquote, pig butchering scam network, industrial-scale fraud run from sprawling compounds in Cambodia and other parts of Southeast Asia. As you've probably heard, the term pig butchering comes from the method. Scammers build trust with the victim over weeks or months, the quote-unquote fattening, before convincing them to send crypto to a fraudulent investment platform for the quote-unquote slaughter. The wallet addresses belong to organized crime groups, and the funds are stolen. These schemes allegedly rely on forced labor, with victims of human trafficking coerced through violence and torture to carry out the scams. The takedown of Chen Zi's organization was a major international law enforcement operation, with the US DOJ working with the Treasury Department's Office of Foreign Assets Control, the Financial Crimes Enforcement Network, and the UK's Foreign, Commonwealth and Development Office. The result was sweeping sanctions against 146 individuals and entities designated as part of the Prince Group transnational criminal organization, effectively severing them from the US and UK financial systems. The Bitcoin itself, though, has a more complex origin story. Analysis by blockchain intelligence firm Elliptic revealed that the 127,271 BTC was stolen from a Bitcoin miner called Lubian back in 2020. However, the indictment and subsequent forensic analysis suggests that Lubian was, in fact, controlled by Chen Zi himself, and the quote-unquote theft was likely an elaborate laundering scheme designed to obscure the connection between the mining operation and the scam compounds. The DOJ's civil forfeiture complaint listed 25 specific Bitcoin addresses from which the funds were ultimately seized, providing a clear on-chain trail from the criminal enterprise to federal custody. Now, before the Prince Group seizure claimed the title, the largest Bitcoin forfeiture in US history was the recovery of funds from the 2016 Bitfinex hack. In February 2022, the DOJ announced the arrest of a New York couple and the seizure of over 94,000 Bitcoin, valued at $3.7 billion at the time. Subsequent actions brought the total recovered to approximately 95,000 BTC. The couple were Ilya Lichtenstein and Heather Morgan. In August 2023, Lichtenstein admitted to being the culprit behind the notorious Bitfinex hack of 2016, in which he stole nearly 120,000 BTC. For years after, Lichtenstein and Morgan engaged in a methodical laundering operation. The techniques were textbook obfuscation, creating fake identities to set up online accounts, using automated programs to execute thousands of small transactions, depositing funds into darknet markets to break the chain of custody, converting Bitcoin into other cryptocurrencies, and finally, cashing out through traditional financial institutions. The complexity brought them time, but anonymity, not so much. The case was cracked through a combination of meticulous blockchain analysis and traditional investigative work. Law enforcement made a breakthrough when a court authorized a search warrant for a cloud storage account controlled by Lichtenstein. Inside, investigators discovered a file containing a spreadsheet with wallet addresses and, crucially, the corresponding private keys required to access and control the stolen funds. The bulk of the hacked Bitcoin had remained in a few consolidated wallets for years, untouched. With the private keys in hand, the agents lawfully seized the overwhelming majority of the stolen assets. Liechtenstein's operational security was sophisticated enough to evade detection for half a decade, but not enough to avoid leaving the keys to a $3.6 billion heist in a cloud account. And that is another way how the US government obtained a huge chunk of Bitcoin. Next up is a real blast from the past. The Silk Road darknet marketplace has been defunct since 2013, but it continues to generate Bitcoin forfeitures over a decade later. In November 2021, law enforcement agents raided the home of one James "Jimmy" Jong in Gainesville, Georgia, and seized approximately 50,676 Bitcoin. At the time, it was valued at over $3.36 billion. Jong had stolen the Bitcoin from Silk Road back in September of 2012 by exploiting a flaw in its withdrawal processing system. He created multiple accounts and tricked the platform into releasing far more Bitcoin than he had deposited. The heist netted him what would become an enormous fortune, and he managed to evade capture for nearly a decade. Jong's downfall came from a single mistake. In 2019, he transferred a small amount of the stolen Bitcoin to a legitimate, regulated cryptocurrency exchange. Unluckily for him, it was a KYC-compliant exchange, meaning this one single transaction was enough to link his real identity to the pseudo-anonymous addresses where the stolen coins had been gathering dust for nearly 7 years. If that isn't a fat finger, I don't know what is. Having pulled off the heist that he did, Jong must have known that the moment that he touched a regulated platform, cops would be outside his door with a battering ram. And when they did, they recovered the private keys from a single board computer hidden in an underground floor safe, and most famously from a hardware device submerged under blankets inside a popcorn tin in a bathroom closet. He must have had a lot of fun hiding those wallets. In total, the government obtained final orders of forfeiture for over 51,680 BTC connected to Jong's theft. But that wasn't the only major recovery tied to the Silk Road, as there was also the seizure of nearly 70,000 BTC, valued at over $1 billion at the time, traced to an unnamed hacker known only as Individual X, who had also stolen the funds from Silk Road years earlier. So, the Prince Group, Bitfinex, and Silk Road cases account for the vast majority of the government's Bitcoin holdings, but the total is continuously supplemented by smaller forfeitures spanning a wide range of criminal activity. You name it: ransomware attacks, crypto tax evasion, illicit darknet marketplaces selling compromised server credentials. The IRS Criminal Investigation Division has proven particularly adept at on-chain investigation, building cases and seizing proceeds across the entire spectrum of digital crime. It's like if ZachXBT was a federal agency. So, the US is sitting on a massive bag of Bitcoin, accumulated over a decade of increasingly sophisticated law enforcement operations. Hundreds of thousands of coins, each with a crime attached to it. The question is, what did the government do with them? Until very recently, the answer was simple: dump it. The U.S. Marshals Service is the designated custodian and liquidator for nearly all assets seized by federal law enforcement. The process was straightforward. Once a court finalized forfeiture, the assets would transfer to the USMS, which would then hold periodic public auctions. At auction, blocks of Bitcoin were sold to the highest bidder, converted to dollars, and the proceeds deposited into the Treasury or allocated to law enforcement budgets and victim restitution funds. It was the same protocol used for seized cars, real estate, and cash. Just liquidate it and move on. Between 2014 and 2023, the USMS sold approximately 195,092 Bitcoin through these auctions. Total revenue generated roughly $366.5 million. At the time, this seemed like a reasonable outcome. The government had turned criminal proceeds into taxpayer revenue. Case closed. Good riddance. The only problem is Bitcoin has gone from an underground pet project to one of the world's biggest assets by market capitalization over this period. This makes the US the nation-state equivalent of the guy who spent 10,000 BTC to buy 2 pizzas. In January 2025, Senator Cynthia Lummis sent a letter to the director of the US Marshals Service. It included a calculation. The 195,092 Bitcoin sold for $366.5 million would, at then current market prices, be worth over $18.9 billion. The amount left on the table was therefore more than $18.5 billion, amounting to a 98% loss in potential value for American taxpayers. This was a quantifiable, politically salient demonstration that the government's liquidation policy had been catastrophically value destructive. And for a government so deep in debt and so tortured by fiscal policy decisions, this doesn't look like a quote-unquote best practice. The auction model, designed for physical assets with stable or depreciating values, had been applied to a novel, scarce, and rapidly appreciating digital asset. The result was a policy failure so stark it became impossible to defend. This is the context that led to the US president signing an executive order titled Establishment of the Strategic Bitcoin Reserve and United States Digital Asset Stockpile earlier this year. As you might remember, the order established 2 distinct entities. First, the Strategic Bitcoin Reserve, which would hold all forfeited Bitcoin. The second, the US Digital Asset Stockpile, would hold all other seized cryptos. The distinction was deliberate and significant. The directive for the Strategic Bitcoin Reserve read, quote, "Government BTC deposited into the Strategic Bitcoin Reserve shall not be sold and shall be maintained as reserve assets of the United States utilized to meet governmental objectives in accordance with applicable law. So, no more auctions and no more liquidations." They're rolling out the red carpet just for Bitcoin. Altcoins, as ever, weren't so lucky. The digital asset stockpile was given no such protection, with the Treasury Secretary authorized to determine, quote, "strategies for responsible stewardship," a mandate that explicitly includes the option to sell. At the same time, the order prohibited the acquisition of other digital assets outside of future forfeiture proceedings. In other words, the government will take altcoins if they could get them for free from criminals, but otherwise, no thank you, not interested. Meanwhile, with Bitcoin reclassified as a permanent reserve asset, the order also instructed the Secretaries of the Treasury and Commerce to develop, quote, "budget-neutral strategies for acquiring additional Bitcoin for the reserve." You can't get much better recognition than the federal government saying that BTC is to be accumulated by whatever means necessary, other than buying it with tax dollars, of course. So, 2025 marked the end of America's paper hands era. Previously, the asset forfeiture model saw assets taken from criminals, sold, and the resulting funds used for law enforcement operations, victim restitution, or general revenue. The executive order was a formal declaration that Bitcoin itself possesses strategic value superior to its immediate cash equivalent. Whether future administrations agree, however, is a big question mark. But for now, federally owned Bitcoin has been moved from law enforcement logistics to national economic strategy. This whole spectacle was arguably the result of Big Crypto's enormous payments to the Trump campaign and inaugural fund, and a little ideologically driven too. But still, you can't deny the maths. The government seized a unique asset, treated it like every other asset, and gave up on around $18.5 billion in the process. Perhaps then, we shouldn't have been too shocked when the US government finally answered the question of what to do with forfeited Bitcoin. And that is HODL. So, they're now sitting on well over 300,000 BTC with an explicit policy not to sell it. The question is, what does this actually mean? For the market, for national strategy, and for the increasingly blurred line between the two. Let's start with the market mechanics. For over a decade, the government was a known seller. USMS auctions were sporadic but predictable. When they happened, supply hit the market. That created a structural overhang. Bitcoin holders knew that at some point the government would dump seized coins, and the price would take a hit. You may remember last summer when Germany famously paper-handed the local bottom, selling off its BTC and giving us some ugly red candles in the process. Same dump, different government. Well, in the US, that overhang no longer exists. The no sale mandate removes a major source of sell pressure and replaces it with a vague imperative to instead accumulate more BTC without spending taxpayers' money. So, the federal diamond hands are right up there with Michael Saylor's at this point. And with the US now one of the biggest holders of BTC on the planet, that's structurally bullish. But there's a flip side. A huge portion of Bitcoin's circulating supply is now controlled by a single entity whose policy can change with an election or a fiscal crisis. The current policy is retention, but an executive order can easily be reversed. A future decision to sell could have a massive impact on the price, and, more importantly, could slam the door on Bitcoin's stint as a federally recognized store of value. For now, though, the Strategic Bitcoin Reserve has 3 years of a Trump-shaped runway, but many questions remain unanswered. How will it be managed? Who has custody? Could it be used as collateral or sold in a national emergency? The language is deliberately broad, perhaps because Washington itself hasn't figured out what a Strategic Bitcoin Reserve is actually for. Watch this space, though, because if and when they do, we'll keep you posted. Until then, why not learn more about the dramatic Prince Group takedown that netted the feds almost 130,000 BTC recently? You could find that video right over here. And for now, though, that's going to be it for me. As always, thank you so much for watching, and I'll see you next time. It's Lewis, over and out.